all, welcome to Billionaire. This is RP here, recording video on 10th of September. We are going to do the analysis of Nifty based on price action and indicators for next week. Then we'll check Elliott Wave. We'll find out the levels with Elliott Wave, and at the end we'll check option chain. So these are the things that we are going to check. We'll also check a little bit of the move on Dow Jones, what is happening there. So it will be interesting video. So do subscribe to our channel, click on the notification icon, and this is the playlist where we are uploading Nifty daily technical analysis with Elliott Wave. It's only 1 minute video. It's hard to create 1 minute video. It's easy to create 10 minutes video, but to fit the content in 1 minute is quite difficult. And we are trying our best to provide the accurate analysis daily on Nifty. So from all the time, you can check our previous analysis in this playlist. And here you will be able to see all our previous videos and try to understand how we are analyzing the markets. So without wasting time, let's check the previous week's analysis. In previous weeks, we uploaded the video on 4th September, that is weekly analysis. This is detailed explanation of the Nifty's move. So previous week, there was a lot of confusions since Nifty was trading in range. So we discussed 3 possible cases. And in that case, the case 1 was a bullish case. Here we are expecting once Nifty breaks 17,992, it can head towards 18,240. But we have a pretty bearish view. We also mentioned the probability for this is 10 to 15%. And this analysis will be invalidated once it breaks 17,166, which is a swing low of 0.38 to Fibonacci. So if this is broken, 17,166, then this chart will be invalid. So we have to wait for confirmation to consider the bullish case. Then there were 2 bearish cases that we discussed. First was a running triangle, in which we discussed Nifty has been running in Nifty is doing a running triangle where A, B, C, D moves are completed and final E wave could be in progress. Once this 17,476 level is broken, we can head on the downside. But there was an invalidation cases for this as well. If it breaks again 17,778, then this chart will be invalid. So Nifty did have broken this level. So this chart is now invalid. We can remove this chart now. This is not required anymore. The second bearish case we considered was impulse on the downside. And here we were expecting an expanded flat correction A, B, and C. So we were expecting here to go on the upside once it breaks this level, 17,623. So it has went up and it has not broken this high. So this case seems to be valid now, and like bullish case and this case, bearish case, is still valid. Here, if we break on the downside, so it will be very sharp drop on the downside if it's a third wave. Right now, there are no confirmation. It's still trading in the range. So let's check what is going to happen next week. First, let's understand with the help of price action and indicators. In price action and indicators, you can see here the levels I have marked. This is the previous resistance from where we got a dip, and here we got bearish engulfing candle. It engulfed past 3 candles, also almost filled the gap in the first candle itself. Then we got 3 days drop, and on the 3rd day, after making a new low, we recovered. So we were trading near 13 EMA, and now even 48 EMA has come inside this particular low that Nifty has made near 17,166. So what can happen next is Nifty can come down like this and then could trade in this range itself, okay, for a couple of days, and then could drop on the downside. Considering this as a strong signal for drop, we are going to assume the downside action to be coming in next couple of sessions or next couple of weeks maybe, because it can consolidate for a longer time. You can see here that RSI is still trading strong. It's above 50. It's bullish, but Aron indicator is trading in consolidation. So we mentioned here itself on the first bearish Marubozu that the upside could be over and we could either consolidate or drop on the downside. So Aron indicator is very good to identify the consolidation. Once this green line, it trades below 50 and red line is below 30 and the lines are parallel, this is the signal that it is the script is going to trade in the sideways for next couple of days. Once it gives the crossover, red line crosses above green line, then that's a bearish signal. So you can here see it has given the crossover, but then again recovered sharply, then gave this consolidation, right? So until this date, until the 14th of July, okay, so it was consolidating and then gave a bullish move after that. So this is the best indicator for identifying the trend, and as of now the trend seems to be sideways, and we need to wait for uh, around red to cross above green. So if there is a sharp drop and it breaks this low of 17,166, then it's definitely going to cross and it will give the red signal. So that is our signal for the next couple of, like, that's our signal we need to wait for. So going forward, as I said, we can test the 48 EMA, which is this blue line, and sorry, which is this yellow line. We can test this like this, and we can trade between these range, and then we can drop. This is one thing that we can say based on price action and indicators. Next part we are going to check is based on Elliott waves. So this is the important part of our video. If you haven't liked the video as of now, do hit the like button because it will motivate us to do better. Let me open Dow Jones. Here I have the chart plotted, right? So the count needs to be updated. I can be having a wrong count here. This count needs to be updating, but here we can clearly see the drop started from 16th of August, and here you can already see a move. It has given almost, what is this move? Almost 9.2% of drop we can see here. Nifty had not dropped this much, right? And this is looking to be a 5-wave structure going on the downside. So whenever we see a 5 waves down, like this, these are the 5 swings, 1, 2, 3, 4, and 5. Whenever we see that, we can consider that this particular low may not be safe. Unless you count the waves wrong, there is a good chance that this low is going to be broken. It has come down sharply from this rally, right? So the rally has been dropped down sharply. So we can safely say that this low may not be safe. So this is the reason why we are bearish on Nifty as well, because all world markets run in a harmony. So we need to watch out a bearish pattern in the Nifty to be formed in the next couple of weeks. So this was the quick intro on the Dow Jones Elliott wave count. I need to update this wave count. This is looking more bearish and the pattern could be something else. I have not updated it since last 3 months. So this is the, for this video itself only, I have checked the recent top and then the counts on the downside. So let's check Nifty now. In Nifty, we can see different picture. Nifty is consolidating since long. So this is hourly chart. Let me bring up the counts that we discussed. So running flat, here there was an invalidation level. Here there was invalidation level. This invalidation level has been broken. So this running triangle is not valid anymore. Let me hide that. So the bullish count is still valid. We are not going to discuss that unless it breaks 17,992. That high needs to be broken. So bearish counts are two. There are two ways that we can consider the bearish count. It can be mild bearish in the sense that this will be A wave instead of 1. This will be B wave without breaking this high, and then it will be C wave. Then again we will head higher. So this can be case 1, which is mild bearish. It will drop downside towards 17,000 or 16,800. Then again will shoot higher, making one more top. So that is mild bearish case. And more bearish cases, this is impulse drop on the downside. So this can be wave 1, which is completed here, and we could be making an expanded flat correction. So now let me zoom in the chart a little bit so that you can clearly see the levels. So here you can see we are counting them as an expanded flat correction. So this wave 2 is still in progress, and it can be A, B, okay, and then wave C, which is 5-wave structure. 1, 2, 3, 4, and 5 can be counted like this. So for this to continue the drop on the downside, we need to change the levels, because what we need now is a break below this level where it had made a low on the 4th wave. Sorry, this level should be sufficient. So 17,484 break should be a sufficient signal for this case to be activated. So this is far away right now. It's almost 400 points downside. So yeah, it can cover in one day, but let's not be in a hurry and consider this completely bearish case. going for the bottom towards 15,183. By the way, in previous our lot of videos we discussed the bearish cases. You can watch those videos as well. So yeah, let's go forward and check what is going to happen in the next session. So let me bring that count. I'll lock this, I'll hide this, and I'll bring this count. So yeah, so this is considering expanded flat correction. Here we are assuming, okay, so yeah, even there is a case that wave B can be a triangle. So in case we are going to consolidate, so the wave A can be, instead of this point, it can be here, okay, and we could be still in a wave B, where a bullish case can also support that. This is a triangle 1 2 3 1 2 3, then 1 2 3 1 2 3, like this, okay, then again one more 1 2 3, and then it will shoot on the upside. So in the bullish case the triangle is also possible, but triangle as of now cannot be confirmed because it's just wave 2. At least we need wave C D confirmation, so without breaking this range. So this A wave's low and this start of the A wave's high, it should not be broken, and we should get a D wave and then a drop. Then only we can say that this is a triangle and we will go on the upside. Otherwise it's not confirmed as of now. So let's check the counts from this low. After here the Nifty became bullish. So let me go on the 15-minute chart. It will be better to view there. So this was looking a wedge structure with wave 1 2 completed, 3 completed here with the bullish gap, and then the 4th completed here, and then the 5th wave completed here. Okay, so this can be considered as a completion of one impulse structure. So this can be wave C or this can be wave phi. Okay, this is a 5-wave structure. So now interestingly on Friday it gave a drop, and here you can also notice there is a negative divergence on 15-minute chart. So these are the reasons why we should be bearish for next session. So there is a negative divergence on 15-minute chart, and the drop from the top on Friday, it opened a gap up. We already forecasted that it will be opening gap up. On Thursday end of the day closing, we mentioned that it would open gap up. Same thing happened, and then here we can see 5 waves count drop on the downside, 1 2 3 4 5. So this is a bearish signal for me, and it got rejected from 0.600 Fibonacci. So how you get 0.600 Fibonacci? You plot Fibonacci on this and this point, and there you get a 0.600 Fibonacci. Exactly, it got rejected from there, from 17,868 levels. It got dropped from there, right? During the closing, it gave that drop. So right now the confirmation for the fall is at 17,786, which is Friday's low. It made a little bit of tail, but in the end it is giving a signal that there is a chance of drop. What other thing can happen here is this entire sequence can be wave A, okay, on the upside. Then this could be wave B, and if it opens gap up and breaks this high of A wave, then there is a chance that it can make a C wave somewhere near here, and then it can drop. So this is also a possible case, but I would wait for a break of this. If it opens small gap up, it does not need to, just 50 points, 50 70 points away from the closing. It just needs to open small gap down below this level, then that is our signal for the drop. So what levels we get in case it opens gap down, right? So in case it opens gap down, we need to watch for downside levels towards 1.600 Fibonacci. So it can fall towards minimum towards 17,700, okay? And the most common levels that we can get on the downside are these. Okay, so we can expect a minimum levels toward this. If it breaks below this, then again it will be a sharp drop on the downside. This will confirm that the Nifty has turned largely bearish. So this is how we can look at the downside levels. So for upside, as I already said, it needs to break 17,868, then we can have a little bit of upside. So yeah, then if what is the case for bullish in that case? When we should become bullish? We should become bullish only when it breaks 17,925. Unless 17,925 is broken, we should not be bullish and we should not consider the upside. So this is how we should look for next session. So in next session, if it breaks this 17,868, look for some upside points, and go for bullish only if breaks 17,925. If it goes on the downside, if it opens gap down, then consider the bearish case as soon as it opens gap down below 17,786. Though you can consider it can open flat based on the global markets, that is Dow and S&P 500 is bullish, but SGX did not show any signs of bullishness after the market, after the Nifty closed at 330, right? So we can have a 50-50 chance in the next session. So now let's check the option chain, what's happening there. In option chain, clearly here you see the resistance is at 18,000 with 69 lakh call open interest, almost 70 lakh call open interest. Okay, so this is open interest on call side. So whenever there is a large open interest on call side, that number acts as a resistance. So the second number, biggest number, is 17,900. Then after that, what we have here, we do not have good resistance but this is very low number compared to these two, 17,800. Okay, so these are the two major resistances which we need to watch for. Then on put side, obviously there is a resistance, major resistance is at 17,500, right? With 43 lakh put writers. So put writers create the supports. So this is the range for this expiry, 18,000 to 17,500. So any major change in the range, it will be considered as a breakout. Okay, in the expiry itself. Apart from that, what is the second biggest number? As I said here, on the call side, it's 17,900, and on the put side, it's 17,700. So this is second major support. Okay, so Nifty likely to go towards this and find a support. Otherwise, if it breaks this by good margin, let's say 17,660, if it comes, 17,660 if it comes, we can expect 150 points up dip towards 17,500. That is the next support. That's the next major support. So do remember these two important points. This is the only use of option chain for considering the open interest. Here you will see the supports were getting created. The numbers are very small, hence you see a big percentage, but that doesn't make much difference. You can see here call writers were added. Call writers added the positions, some positions here. This also does not count, so we cannot conclude anything because it's only one day in the expiry. Only one session has passed, right? So this OI change may not tell you the clear picture. Only the clear picture from this option chain is the supports and resistances. So 17,900 and 17,700 are immediate supports and resistances, and the major support is 17,500 and major resistance is 18,000. So that's all in this analysis. So hope to see you in the next week. Do hit subscribe and like the video before going. Thanks for watching. Bye bye.